This is a donor-centered, donor-focused, donor-driven approach to charitable gift annuities. This is a case study, December 2016. The objective here is tax-advantaged income, steady cash flow, and you want to make a difference with your money. This is Linda. She's 69 years old. She gifts a $100,000 cash gift to a charitable gift annuity, and she gets $5,000 a year for life. That's 5%. She gets a $36,000 tax deduction up front. She also gets to direct a portion of the money, $19,540, to either fund today a charity or grow and give gifts over time as she chooses. 75% of the money is tax-free during the first 16.7 years. Here are some unique differences. She can choose to fund the gift now. She could have multiple charities and not locked into one. She could choose to defer gifts and grow assets. She could involve others in the gifting, like grandchildren. She could fund a community foundation or a donor-advised fund. Easy to implement, fast and simple paperwork. So what's your next step? You could request an illustration, disclosure page, need dates of birth, source of funds of the gift, one of or two income beneficiaries. If funding with highly appreciated assets like stocks or real estate, then we'd like to know the cost basis. The minimum funding amount is $10,000. So you want some help with tax control. How? Because selling inside of a charitable gift annuity may avoid upfront capital gains. It may help retain tax credits. It may help with maintaining tax deductions due to phase-outs at higher income levels. Also stretches out the capital gains over a lifetime to lessen the impact from a single year event. So one of Linda's options, she could establish a donor-advised fund. This takes 5 minutes. Doing so, the money funded in this case was $19,540. This is a factor of the donor's age and the amount of the gift. No attorney is necessary to do this. Donors love tax-advantaged income and the feeling of choice. Many donors prefer to be flexible on when and how gifts are made. Donor's choice not mandated by the annuity. So in this case, Linda loves these 4 charities. She can choose to fund those now or over time with a donor-advised fund. So it gives her control and flexibility. So you could talk to your tax professional. This is not considered tax advice. You want to seek your own advice on tax matters with a professional with full disclosure. So what do you do with this charitable deduction of $36,000? Well, maybe you sell other appreciated assets and utilize gains without taxes. Maybe you spread the deduction into the future. Maybe you amend a past tax return. Maybe you take some extra distributions from a qualified plan, such as an IRA. So Linda's a generous individual. She wants a lifetime of tax-advantaged income. She prefers to be in control of who and when she gives to the causes, the charities that inspire her. She wants things simple. Avoid hiring attorneys to draw up complex legal documents. That's avoided. So in disclosure, these numbers were run December 7th, 2016 for a specific person, not to be taken as advice for what your numbers will look like, but rather give you some insights into the nature of this unique donor-driven charitable gift annuity. Again, the donor chooses the charities, the amount to give, where they wish to give. If you'd like a specific illustration, discuss your options. We're open to that conversation without a fee to talk to us. This presentation is limited as to the details and the disclosure. Illustration will address the American Council of Gift Annuities standards of disclosure. Seek your own tax-specific advice for your situation. If you'd like to talk with me more, Scott at Stewardship Matters. I'm a chartered advisor in philanthropy. That's Scott at stewardshipmatters.net.